Hi everybody, thank you for giving us your time today. My name is Chris, I'm the Chief Executive of the Pebble Group. I've been with the business for around about 21 years and leading it for 13 of those years through various ownership cycles, and really pleased in December 2019 to list the business on AIM. I think what I'm most proud about on the Pebble Group is really being surrounded by some amazing people, very talented and very dedicated, and one of those is on my right.
Hi, I'm Claire Thomson and I'm the CFO of Pebble Group. I've been with Chris for the 13 years that he's been leading the team here, and so yeah, compliments back at you, I think. And also, so I've been on that journey, been through all the various different types of ownership that the Pebble Group's been under in those 13 years, but really proud moment to list last December, and looking forward to introducing the business to you all today.
Thanks, Claire. So the Pebble Group is servicing the promotional products industry. We're doing that through two different and differentiated businesses. One called Facilisgroup, based in North America. Facilisgroup provides technology and services to entrepreneurial businesses in North America, and that helps those businesses professionalize and grow. And Brand Addition is a global supplier to large corporates who are looking to engage with their stakeholders through exciting product. And through those two businesses, we have the Pebble Group, and we're going to sort of walk you through each of the different business models. Claire will talk you through the numbers that we have now. And as well as how we've navigated through 2020, we're also going to give you about how the businesses are started performing in 2021 and where we see them going in the future. So our group in the promotional product sector, this is a little bit, first of all, on the industry itself. Looking at the boxes on the left-hand side of the page, the brands and the customer really kind of create the need for product. So that is businesses of all sizes, all sectors and all geographies really love putting their brand on a product to create engagement with their stakeholders. And that business in 2019 was a 50 billion global business, so a really huge industry that we're part of. On the left-hand side, we have our suppliers and our manufacturers and decorators, and those businesses really are generally product specialists. And so with the brands wanting to buy all sorts of product from different types, this creates the need for the distributor in the middle that creates that link between the brands wanting the products and the supplier producing it. And that's where the Pebble Group focuses most. So Brand Addition is very much sort of one of those distributors, a larger one in the industry, and focusing on the large corporates. That's all Brand Addition does. And Facilisgroup sells its technology to the distributors and help those distributors link with great suppliers and their customers. And that's the business and where we're in today. Looking back on 2020, I think we've navigated it successfully. I think it's hard to say you're proud of your results when actually you've got some minuses in there, and actually some of our business went down. But I am proud of the results. I think they've come from some amazing hard work, and they haven't happened by accident. It's happened by a lot of our people working extremely hard under extremely difficult conditions. And I think before we go into the numbers themselves, I want to say a huge thank you to all of our teams across North America, Asia and Europe for all their efforts and hard work they've put into 2020, which was a very, very hard year for everybody, not just from a business point of view, but personally as well. Now, what we want to do is set out the business models, both the Facilis and the Brand Addition. But I think two questions that come out of there from 2020 is Facilis, through its technology model, has absolutely performed amazingly well, a very robust performance. And so I think we tick the box off Facilis as being a business that can perform through a difficult period, but where's the excitement now? Where can it really grow? We'd like to set that out. Brand Addition, it has been affected by COVID and sales have gone down, but really it's kind of done extremely well to get through there. 100% retention of its major clients. And what we'd like to show you how Brand Addition recovers very quickly from the difficult time that we had in 2020. So we come out of 2020, I think, doing very well. Claire's going to walk you through the numbers now. But I think what I'd like to do after the numbers is talk you through the different business models and where we see the business going in 2021.
Okay, so this slide pulls out the group highlights for you, and the two charts on the left-hand side, the revenue and EBITDA, tell the story really that COVID had on the group's high-level numbers on revenue and EBITDA. But really, I'd like to talk you through that in a bit more detail when we get onto the segmentals, because there's a very different story in each of the businesses that is easier to understand at that level. The adjusted EPS in the year went forward, And I think that looks interesting when you see the minus signs next to the first two columns. But this was our first year as a listed business. And so the 2019 numbers have some interest costs that were associated with us being a private equity business at that time that aren't in the 20 numbers. So that helped that underlying number. And the cash number there on the right, that's something we're really proud of. So we ended the year with 7.1 million of cash in the business, and that compares with 8.9 at the end of 2019. But it's good to understand that 2019 number had some cash that came with us when we went through the IPO. So it had 3.9 million of cash that came with us to settle the IPO liabilities that were paid during 2020. And also out of that 2020 number, we acquired some software assets that we believe are really going to take our business forward. And we'll talk to you a bit more about that as we move through the presentation. This next page is showing you, again, at a really high level, how the dynamics of both of those business models that we've talked about and how they impact both revenue and EBITDA. So Facilisgroup is a technology business and has some amazing EBITDA returns in it, plus 60% actually this year. And so Brand Addition is a business that sells product, and that's a much larger proportion of our revenue as a group. But when you look to the EBITDA returns that are generated by Facilisgroup, that has a much larger contribution to that EBITDA number. And for the first time this year, Facilisgroup was over 50% of the group's operating profit. The chart here on the right-hand side is just helping people understand a typical working capital cycle. And really, when I'm talking about working capital in the group, it's all about Brand Addition. Brand Addition, we'll come on to talk about it, but works with some amazing brands and has a really strong balance sheet, but it does have a well-trodden working capital cycle as well. That's generally really low around December, but that builds as we move through Q2 and is really at a high point in July and August, where we're invested in some orders that we're going to deliver through in the year to our customers and we'll collect out on as we move through Q4. So it's good for people to know and something to know that's particularly relevant when we get to the interims. Group P&L, so pulling out the kind of major movements from a group perspective. In the year, this was our first full year as a PLC, so you can see the movement in our head office costs, and that's really the group bearing the costs of being listed. We had an increase in our depreciation and amortisation in the year, and that's because over the last 2 years in particular, we've been investing heavily in our technology and the technology that the group is able to deliver to its customers, and that comes with an incremental D&A charge, and we'll talk to you about where that investment's taken us as we move through this presentation. The exceptional items in the year relate to some costs that we incurred in Brand Addition. As we moved through Q3 and got into Q4, then we had a much better visibility of where we saw our sales line of the business going, and we unfortunately had to make some changes to our headcount, and that's the cost that was associated with that. And so segmental analysis, we'll go to Facilisgroup on the left-hand side. Chris said at the beginning that we were really proud of where we got to in 2020, and I mentioned that there was kind of two different stories. And Facilisgroup, it was when we were going through the IPO, a lot of the questions we got was about how robust were our businesses, and we believe that in navigating 2020 sensibly, we answered that question robustly at the time, and I think we've now got the evidence that kind of supports that answer. Unfortunately, we've got the evidence a little quicker than we'd expected or would like to have got, but we've got it. But Facilisgroup performed really well. We grew the number of partners that we have in that business, we grew our recurring revenues, and we moved our EBITDA forward, which in a business in our industry, in this sector, we believe that we'll stand alone this year in being able to say that. So you can see that the recurring revenues of Facilis moved forward by 13% last year, and that's the impact of new partners that we won in 2019, and then the new partners that we successfully brought on in 2020. We have some great EBITDA margins in Facilis, and you can see that improved between 19 and 20. It looks, when you look at the people and overhead, like the cost went backwards. I think what I'd like people to take away from this is that they did, but that was a temporary movement. There was some costs in 19 that didn't recur, and underlying that number, we did invest in that team, and that will come through as we talk about the business. But super EBITDA returns and at 61%, something that we're very proud of for last year. Brand Addition. Again, this is a really, really robust performance in what was a very difficult year, and so the revenues did move backwards. I think what we talk about when we speak about Brand Addition is the two different types of business that we have in there. So we have what we refer to as a consumer promotions division and a corporate programs division. And consumer promotions is where our customers are using the product that we supply to support their strategic sales. So our product will sit alongside their core product to encourage people to buy. And that part of our business performed really robustly in 2020, and the revenue levels there were consistent with those that we achieved in 2019. Corporate programs where customers are using our products in general marketing was the piece that was most heavily impacted, and that was really affected as we all moved into lockdowns in early Q2, and then as people developed a new normality, then we saw that business start to pick up, and in particular as we moved through Q4, but that's where part of our business was affected. The people and overhead, you can see that did go down in the year, and that's as a result of the changes that I've talked about that we made, but also we did use furlough. We used furlough in the UK, and then we used alternative schemes across the other areas of the business, so whatever the equivalent was in those local jurisdictions. We asked our people to make some temporary salary cuts, and they're included in there. And also there was some savings because we weren't travelling and we weren't recruiting, and so there was some operational savings there. So that all contributes to that overall. Next on our cash flow, and I think the message I'd like to give everybody here is that we had a really robust underlying operating cash flow performance. So you can see there at the top line that we were impacted and EBITDA did come down. What we get in Brand Addition is the positive impact on cash as our working capital comes down. So the volumes go down and the cash flow comes in, and so that's almost an equal and opposite offset of the impact that we had on EBITDA. I've mentioned that we continue to invest in our technologies, and you can see that investment there in the 3.1 million that was made this year, and the leases that's the cost of the group's infrastructure. And again, in the year we went into new premises in our Facilis offices, and we also took on a new warehouse in Europe, which is helping us grow our business there and really make sure that we're robust in dealing with any challenges that might come out of Brexit. And moving down there, I've pulled out separately the impact on our cash flow of the IPO accruals and the cash that we came into 2020 with, because that's not a trading item, that was purely us settling the costs associated with the IPO. And then at the end of 2020, we purchased some assets that we're going to use in our Facilis business to really accelerate the growth of that business, and we'll talk to you more about that, but that's the 2.6 million you can see coming out on that cash flow statement. Balance sheet, the things to understand here is we've got a really strong balance sheet. The majority of our assets are sitting in non-current assets, and that then relates to goodwill from historic acquisitions, but also the software investments that we've been making, and in particular been making over the last 2 years. The working capital is all associated with our Brand Addition business. Facilis it has barely any working capital. It's very working capital light. Brand Addition's customers are huge corporates, the likes of Google, Michelin, Intel. So really, we've got really high quality assets in that balance sheet, and like I said before, it's a well-trodden path in terms of that net working capital cycle that we believe is really well managed. That's it. I'll hand over to you.
Okay, thanks, Claire. And I'll just kind of now dive into the two businesses and give them a bit more. We're going to give an overview of the model. We'll put some KPIs in there to show how we're measuring the business performance year on year. And then for Facilis, I think the aim is to show, excuse me, where does the future lie? Where's our vision, our aspiration for the future? And I'll start right now. So going to the business model itself, if you remember at the beginning of the slides, we had those sort of 3 boxes, the brand, the distributor, and the suppliers. And just kind of refining that language slightly. And we have the partner in the middle, and they're our customers at Facilis. And so they're businesses that are generally often management-owned, family-owned businesses, and highly sort of credible entrepreneurs who have built great distributors, and typically between 2 and 15 million of revenue in North America. So if we look at those red arrows that go up in the middle between our preferred suppliers and our partners, our revenue's in 2 ways. So we provide our technology to our partners, which is a CRM, a product search, and an order workflow tool. And that really kind of helps them manage their business really closely, helps them be extremely efficient, and we hope gives them time to then sell. And so 75% of our recurring revenues, which is the vast majority of our income in Facilis, comes from that technology subscription that our partners pay to us. On the other side of that, we've got around about $1 billion going through from our partners. So $1 billion is going through our system, and we try and help our partners get great pricing, great service, and rebates back from suppliers, and by pointing them to a really quality group of preferred suppliers. And that's something, it's around 55 to 60 preferred suppliers in both the US and Canada, and some of the best in the industry. And for helping those suppliers market to our partners, those suppliers give us what we call a marketing fund, which is the other 25% of our annual recurring revenues. And that order workflow is where our income has come from so far within Facilisgroup. On the right-hand side, you can see under Facilisgroup, we've got the online stores, which is that dotted red line. And that's a new product that we're bringing to market in 2021. So Claire mentioned an acquisition that we made of some software assets at the end of 2020. Our partners and many distributors in the promotional products market use some sort of online store to help sell to their customers. And our partners are using those stores right now, and from lots of different types of store, and have been asking us, is there something that we can produce that can integrate with our current technology that again helps their efficiency within their business? And so that's what we invested to, and then we build it upon. I'm really excited to say that actually we're launching that second product for Facilisgroup into our partners in April this year. And then that's a product I'm going to talk about a little bit later, but it's a product that we will offer to the wider market as well eventually. Looking at some of the KPIs of Facilis, and it's a great business that you can model out and see how it can grow. The revenues, these are in pound notes, and the revenues, that dark blue line is how our recurring revenues have gone up. And we class recurring revenues as that technology subscription that we receive, and the second piece is the marketing fund from our preferred suppliers. And that technology subscription and the marketing fund, 95% of our overall revenues. What it gives is this great visibility of our revenues through the year, and it's paid on a monthly basis in cash by our partner. On the right-hand side there, you can see how the business has evolved and the number of partners has grown. We sell to our partners, and why we they choose to work with us comes under three things. So first, the technology, and that's the initial thing. Secondly, those amazing preferred supplier relationships that we develop with them. But thirdly, the community that we create. So we bring the partners together. They have their own name above the door. They run their own businesses, but we bring them together as part of the Facilis family and community, and they get an awful lot out from interacting with their peers and the suppliers. And that's actually led, those numbers of growth that we see there, there's hardly any attrition in there at all. It's almost 100% retention of our partners, because they get value out of the technology, great supplier support, and are part of a really good community as well. So that's helped those numbers really grow over the last 2 years. And even in a COVID year, we actually recruited the highest number of partners that we've done as a business. Looking how those partners performed, because I think, again, before 2020, you could look and say, well, what is the quality of the partner group? If there is a real downturn, will they suffer? I think these slides here show what a great quality of customer that we actually have, and those businesses and how good they are. So on the left-hand side, the gross merchandise value, that's the value of the sales that go through our technology. You can see that has steadily increased year on year, and actually has a little bit of a kick in 2020, getting to 1 billion going through the system. And that 1 billion, actually, we were expecting that to happen in 2020, although the makeup of it was a little bit different. So I think the traditional market went down. So I think the promotional products market in North America probably went down by around about 20% last year. And you can see actually the sales through our system have gone up by 25%. And a lot of that is to do with some of our partners being highly entrepreneurial. And as traditional sales fell off, they went and sold PPE, found suppliers and found customers, and that went through our systems too. So a highly entrepreneurial bunch of partners are the customers to the group. In the middle, it shows the spend of our partners that went through our preferred suppliers. So again, that's been growing steadily. You can see it's actually flat in 2020, even though the GMV actually moved up. And the reason for that was what I talked about, was on the PPE spend. And so PPE wasn't a huge category for our preferred suppliers in the year. And so that's why that is flat year on year, as opposed to gone up like the GMV. But still, it being flat, so $300 million going through our preferred supplier year on year, very, very good performance. And then on the right-hand side, I think it was really good to show you how our partners behaved and how their sales behaved through 17 to 2020. you can see you can almost kind of copy and paste 17, 18, 19. You know, nobody's gone and decreased by 30%, and a few had increased by 30%. So the vast majority, very much in that 0 to 10% growth range. That's where they were over those years. You can see how that line's really stretched out in 2020, where I've actually had more than ever grow by 30%. That'll be the guys going into PPE, and you can see on the left-hand side, you know, more than we'd have ever expected, or not, never expected this year, but more than we'd have ever thought went into that minus 30%. So I think what's really encouraging, and I think what we're all really proud of, the quality of those businesses and the people running them, and I hope our technology supporting them, and then all the partners and all our customers that went into COVID-19 came out the other side with us. And I think that's a really, you know, a fantastic point in many ways for their businesses and for ours. And so if that was the year behind us, you know, what's the year ahead of us? And I think we're really excited about bringing to market the second product for Facilisgroup. And that's the software that we talked about that will help. Our current software has helped our partners be efficient, have great visibility and understanding. It's really been in a back office system. What we're now doing, as well as the back office giving our partners time, what we'd like to do is give them technology to sell as well. And that's in the form of software assets through various different types of online store. The foundation for that has been from the acquisition we made in December 2020, but our internal teams have been really busy since then developing the software. And I'm really pleased to say in April, we'll be launching our first stores. And what this store platform will now help us do is three things. It will drive our recurring revenue. So it'll be a separate product paid for separately. It'll be offered to our existing partners to help their businesses continue to grow. And we have an audience there that we can already speak with. We hope that actually by offering a spectrum of technology, it will actually attract new partners who are interested in coming to a business that has both a back office and a selling tool to work with them as well. And thirdly, we will offer this to the wider market too. So there's three opportunities for us to grow the recurring revenues of Facilis through this product. And in terms of timelines to launch, as I say, pop-up stores and the sort of the early release will come out in April, and we've had good partner interest in that already. The real differentiator for us is going to be in the integration. So what we have already is that sort of back end helping the guys sort of through their CRM, their product search, and their order workflow. And actually our stores products will integrate with that from August. And that will be a real benefit to our partners. That will give them even more time to sell, even more efficiency in their organization. And we hope will drive a good uptake of that product. And then in January, we'll begin to sell to the wider promotional products market in North America. Complex stores underneath there where we're going to put together inventory management systems. We're working really hard through our own technology teams to develop the products that we purchased in December. And we'll put the first version of that out at the end of this year, and again continue to develop that to get the full product out in 2022. So really exciting. We're launching our second product as Facilisgroup in London. And now, you know, we kind of talked long and hard about how do we talk about our vision for the business, our aspirations for the business, and I'm really pleased to speak to all investors and potential investors about this now. These are the three products that we're going to put into the market. The product that we have today, so all the statistics that we've shown you so far, is that bottom row, is that order workflow for distributors who are 2 million plus. And that will continue to grow and will continue to develop that business throughout 20 and beyond. In 2021, it's the e-commerce platform that I've been talking about, based upon the acquisition we did last year. We're launching that now. Our second new product is launching now. And that will again drive our recurring revenues further. And really pleased to say, you know, we've talked about it for quite a long time, but really pleased to say in 2022, we'll take a version of our technology into the wider promotional product market in North America, where are those many emerging entrepreneurs who need good technology and good supply chain to help them spend time on selling. And we'll be launching a product in 2022 to that group. And so our e-commerce platform will actually go across all sizes of distributor. But then we'll have two products really specialized and focusing, one on the growing, maturing business and one on the emerging business too. So really exciting that instead of one product in the market we have today, we'll have three going forward. We're spending money on doing this and putting quite a lot of investments. In the last 2 years alone, we've spent $8 million on developing our technology. And we will continue to spend a number of $1 million in the next few years developing all three of these products. behind that technology investment, we've got an amazing team as well. Ashley McCune is the head of the business and the president in North America, and she built a wonderful team around her. So in the last 18 months, we've developed our leadership team under Ashley. We've developed the wider business. We've invested into the technology, and we've invested into the infrastructure of the organisation. And so behind these products is a very good organisation and solid business wanting to invest and to grow. And through 2021 and 2022, we'll be really investing into the sales and marketing side as well. So debated long and hard about putting a number out here. And I think, the word aspiration is very important. We do give formal guidance in other areas, but this is talking about aspiration because we could keep this to ourselves and not share it with the wider world. But, I think it's important for you to understand our ambitions for the business. And what we'd like to do is by the end of 2024, our internal aspirational target that we've shared as a team and developed as a team is to take this business under the 3 products to the 50 million of recurring revenues. And again, we wanted to share that because we wanted to show you why we're investing in the business and what we believe the goals are at the end of it. And but then I think it's really important to show you milestones and stepping stones of how we actually get there. And so we publish these numbers now, and our feet are to the fire on them. And so each reporting period, we'll put these numbers out and show you how we're tracking against those. And if you like, those numbers are before the equal sign. And if we hit those numbers after the equal sign, we'll hit that 50 million of recurring revenues. And that's our goal, but certainly an internal aspiration. So now moving on to Brand Addition, slightly different business, same industry. And Brand Addition really focuses on the large corporates, and that's all we do under contract for the large corporates. Going on to the business model, you'll see here, again, we have the brands on the right-hand side and the suppliers on the left, and Brand Addition right in the middle. And what we're doing is we're selling products, but actually it's really the complex services that the large corporates engage with us for. And what we look to do is win those large kind of contracts through tender, and then over a long period of time, bring value into the business over developing a long-term trusted relationship. Claire said, I think earlier, we split our sales into 2 parts. Corporate programs is where we'll host a website, we'll have a product range together, and we'll distribute our products all over the world to our businesses to help employee engagement and brand awareness. Corporate and our consumer promotion side, which is 40% of sales in 2020, slightly different. Here we're selling to our customers, and they're putting our products alongside theirs to help drive its sales. And so it's a very key part of the selling strategy of those businesses is to give in a gift with purchase, a value add alongside the sale of their own product. But what these businesses are really contracting with are really, I think, 3 things. It's firstly for the excitement, put something exciting and interesting in the hands of their stakeholders, something that makes an emotional connection. I think secondly, they're after efficient servicing, good pricing, working internationally. That's what we do as well. But I think the growing thing that shouldn't be underestimated is about ESG and sustainability. The types of customers that we're working with, their brand equity is massive. So what they really do also buy from us is managing their brand for them. And so where the product has come from, what the product is made of, in whose hands it's actually made, is enormously important to them as well. And so the creativity, but alongside the brand management is enormously important. And that's why they develop these long-term relationships. I'm going to hand over to you to do this one.
Thank you. Yeah. So this chart sets out the kind of the key messages, I suppose, that we want to share behind the Brand Addition revenue number. And I suppose it's important to say up front, these are the same numbers cut in 3 different ways. The first chart on the left-hand side shows you that split between consumer promotions and corporate programs. So the dark blue bar is the consumer promotions, and the slightly lighter grey is the corporate programs. And you can see that it was the corporate program side of our business, as I've already referred to, that was affected during 2020. The middle chart shows you the split of revenue by existing and new customers, and the mantra in Brand Addition is, as we say there on the slide, win, grow, retain, repeat. So we've been really successful, not only winning new business and implementing and growing it, but really hanging on to those customers. So where we've got the recurring revenues in Facilis, we've also got a similar profile in Brand Addition where we've got a really high level of repeat business, and the business has been really successful at winning new clients and holding on to those and growing with them. And then it's a contracted business that we've got in Brand Addition. So the chart on the right-hand side, showing you the split of revenue, between our top 10, top 20, and then the rest of the clients. And so there's a real concentration of revenue in those customers. But again, that we see that as a good thing, that we've been managing to win, grow, and retain those customers over time. These two charts showing you our diversification in Brand Addition, both by sector and then obviously by revenue destination. So the outside pie is 2020 and the inside is 19. And you can see we're in some really great sectors. So we're not in anything that's been too damaging. We're not in hospitality. We're not in travel. We're in really strong sectors with some amazing brands, all of whom, we remain customers today. And as we all return back to normality, we expect those customers to start spending with us again. And then the destination, it isn't 19, 20 aren't a copy and paste of each other. They are different numbers, but global pandemic for us was exactly that and affected us in the same way across the globe. So there hasn't really been too much change in our revenue by destination. So Chris, talked about Facilis and us kind of getting through 20 and then really wanting to answer the question for you all of where does Facilis go now and what are our ambitions for that business. Thinking about Brand Addition in 20, the question we felt would be asked for us is how will Brand Addition perform in 2021 and how quickly can it return to pre-pandemic levels? And that's exactly what we're trying to explain for you here on this chart. So when we've been talking to yourselves and our investors and the announcements that we made, we've very carefully chosen the words we expect revenue in Brand Addition to return towards 2019 levels in 2021. And here we're trying to give you some science as to why we think that that's the correct statement to make and why we feel comfortable in making that. So the two bars on the left-hand side chart are the facts of 2019 and 20. And again, split between that consumer promotions and corporate programs revenue. And then what we're doing on the right-hand side of the chart is giving you three possible scenarios that show how we need those types of businesses to behave to get us back to that analyst consensus at around about 91, which is, where we believe we would be meeting the statement of returning towards the 2019 levels. So what we're saying needs to happen is we need to retain that robustness in that consumer promotions revenue. So you can see the 29 million running across the bottom in all charts. And we believe that that's a sensible position for us to adopt. When we announced our results on Tuesday, we said that our order intake at the 19th of March was 41 million versus 31 last year. And a significant proportion of that 41 is that consumer promotions revenue. We get really great visibility on those sales. Our customers place orders for those early in the year in Q1 and Q2. And so we feel pretty confident sitting here today that 29 number is achievable, and we will hope to get ahead of that. But modelling these scenarios, we feel that 29 is a comfortable number to put in front of you and something that we feel confident with. The 7 at the top of those charts is a contribution from new business. So last year, Brand Addition won 2 amazing new clients in Intel and Scania. You can see in the 2020 numbers that we invoiced 3 million to those 2 customers in 20 alone, and they were clients that were won in the year and implemented as we got into Q4. So we feel that a target of 7 for those customers this year is a sensible target. And so again, if we're assessing the potential bar charts, I feel confident around the 29 and I feel comfortable around the 7 looking at the activity that we've got on those clients today. The question is then around how will those underlying customers at Brand Addition perform? And here we've modelled for you what we need to do to get back to 70, 80 or 90% of 2019 and the impact that will have on the 2021 numbers. So hopefully that puts into a picture the words for you and also gives you a sense of the science that's sitting behind, science and the thought that sits behind that statement.
I think something we did want to touch upon though, which quite rightly is a growing topic, is ESG. I think there's more focus being put on this for public companies, and so not only do we understand that, but we really welcome it. It's something from our Brand Addition business that we know very well from working with a really large corporates, and so we want to be a very results-driven organisation, but results the right way. And so this sort of matters to us very personally, from our team and for our reputations as a business. So investments into ESG is enormously important to us and to do the right thing. We've made 3 great recruitments, some super people, which again is kind of, I suppose, evidence of us improving, not just talking, but actually doing things around it. And so 3 super people have joined our organisation to help advance us in these 3 things. I think we've put double the pages on ESG in our report and accounts this year. I think it's coming out in a month's time or something, which again sort of sets out not only what our ambitions are, but what we're actually doing, and we're going to measure ourselves, and our progress against those things. And again, I think it helps, like writing down our aspirations. It's good to also write down sort of in here that we're going to be putting out a standalone ESG report in the second half of 2021, again, to demonstrate sort of our commitment to that topic, and also kind of measuring our progress against it, and we'll continue to do that. It has absolute sponsorship for myself and our chairman, Richard Law. It's very important to us, an organisation is a standing point on our sort of executive committee agendas and our board agenda too. And how we're translating ESG into the business is we looked at what was on the mind of our investors, our team, our customers and our suppliers, and sort of triangulated all the different topics that were coming out. And we got those 4 cornerstones on the right-hand side of this slide, that's what we will kind of measure ourselves under, and sort of subtopics of those what we'll do. So a very important topic for us. I say we are definitely a results-driven organisation, and results the right way. And we do want to do sort of do a true commitment to ESG, and and be a leader on that side of our organisation too. So just to summarise, I think we've got through 2020, and a huge thanks. I think it's a nice time for me to say again, a huge thanks to our team. It's been an incredibly difficult year. How it's impacted people personally. Amazing dedication we've had. I feel very blessed and sort of privileged to be surrounded by so many amazing people. So thank you to them. That also includes our board. I think Claire and I have felt enormously well supported by our chairman, Richard Law, our non-execs, Yvonne Moynihan and Stuart Warrener. So thank you to those guys for your counsel and your support through the year. That's been very, very valued. We've had a very good start to 2021. Facilis is going well. We're very excited about putting the our new technology out there, our second new product. And on the brand addition side, our consumer promotions business has started extremely well. We have over 40 million of booked business already for this year. And as Claire demonstrated there, the different dynamics and activities in the business allow us to be able to say, we're moving towards the 2019 numbers. So I think that's pretty much everything from us. So on the back of that, look, thank you very much for investing your time in us today. And what we'd like to do now is hand back to the team at PI World.
We do have one question which asks, how much of the company do management own?
Thank you. And I think it's just under 10% now between the board and the management. So obviously through an IPO process, we all took a stake in the business. And I think it's just under 10% is held by the board and the wider management team. But really, again, what this allows us to do at a public listing is get our team involved in the value creating the business. So we put our first LTIP out at the back end of 2020, and we have, I think, 48 people, was it? So a wide number of people involved in that from our senior management group are invested through an LTIP. And in 2021, we'll be putting our first Save As You Earn out. And, we've got people who are very invested in our business, emotionally, and it'd be great for them to have some of the upside of the value we create as well. So.
Thank you. And what's the typical working capital outflow from December to June in pounds million, please?
Yeah, so we would go, a low point would be about 8 million in December. And then we would see that increase to a peak of around about 17.5 million. Usually that's around July, August time, and then that would come back down to that 7 number at December.
Thank you. And how much of Facilis GMV was PPE in 2020?
So I think there were probably around 200 million, that sort of mark, 150 to 200 million. And so that's what we believe is in there.
Thank you. And are Shopify a competitor for B2B storefront products in the promotional goods market? So
in understanding, surveying our partners and our customers and understanding what they currently use, there was sort of quite a long list. There was nothing sort of as a dominant supplier, but Shopify was one of them. I think probably 3 or 4 partners, something like that, we're using Shopify.
Thank you. And for Brand Addition, what's the EBITDA margin?
So we would point people to around about 10%, so which is the 2019 number if you're looking to model that going forwards. And then we'd hope to improve that and get some kind of benefit of economies of scale as we move forward. So maybe move into 11 as you get out as to the outer years, but I think 10% is a sensible place to base any modelling.
Thank you. And is there operational gearing on both sides of the business?
I think on the Brand Addition side, there is a little more heavy lifting as the sales grow. So I think, as Claire just said then, on the gearing side, you would expect to be less so on Brand Addition. On Facilisgroup, as that business grows, just because of its nature, in being a tech and subscription model, you would expect, gearing on that side, yes.
And what are the acquisition opportunities for both businesses?
And so we've grown the business. I think, since I've been managing the business, I think we've probably made 4 significant acquisitions that have actually, have done very well for us, but I think right now there's nothing that we're looking to acquire. There's nothing in the pipeline, but we are, I suppose, open to opportunities. But I think probably it'd be more on the technology side of the business at the moment. But our plans that we're laying forward, our aspirations within Facilisgroup are at the moment organically led. But that's not to say that our eyes and minds are open to acquisition opportunities should they arise.
Thank you. And that's the end of questions. Chris, do you have any closing remarks?
I don't, just say thank you very much for your time. So I hope we managed to get through that okay. It's the first time doing this, so both a little bit sort of apprehensive doing it, but I hope it's been useful. And I think once you've started these things, it's probably the right thing to carry on. So we'll probably see you at the half year. But thank you very much.